Yes, guys. So until now, we have seen the discussion regarding the definition and the scope of the standard Ind AS 40 investment property. Now, we are looking at the concept of the measurement. And I said initially it is supposed to be measured only at cost. Ind AS 16, if you remember, we had multiple situations which has arisen. Identifying the cost on separate acquisition, identifying the cost when multiple assets are acquired in a single transaction, identifying the cost in case of exchange of an asset, and identifying the cost in case where there is a self-constructed asset. Now the same concepts as it is will apply even to your Ind AS 40, but there is an additional thing which will also come up. So what is the extra which has to be coming up? We will discuss about that. Now subsequent acquisition or subsequent measurement on cost basis, we already have discussed it both under Ind AS 38 as well as under Ind AS 16. It will still remain the same. So let's talk about initial measurement at cost. Initial measurement of investment property. When we talk about initial measurement of investment property, we will talk about concept of separate acquisition, where it is acquired separately in a separate transaction, arising due to exchange of assets, self-constructed assets, and we will also talk about this additional part called as acquisition from a lease. These assets which are acquired under a lease in the terminology are called as ROU assets, right of use assets. This is the extra point under Ind AS 40 that we have to discuss. While these three, separate acquisition, exchange of assets and self-constructed assets, while these three, I will cover it, I've already covered it as a part of our discussion on Ind AS 16. There is nothing difference. There's no difference, guys. Similar to Ind AS 16. There's nothing that I have to discuss right now, but this part has to be discussed. Acquisition from a lease of an ROU asset, which is covered under Ind AS 16. This measurement of acquiring an asset which has been acquired through a lease and is recognized in the books of the enterprise as an ROU asset, it has to be measured as per Ind AS 116. I'm going to just tell you what it is. I'm not going to discuss completely in detail what is the measurement as per Ind AS 116 because it is a lengthy discussion that we need to have. So in general sense or in simple sense, if I have to talk about measurement as per Ind AS 116 for an ROU asset, it should be a present value of cash flows arising from the lease. So what are the present value of cash flows arising from the lease? What kind of cash flows are there? What is the inclusions in those lease rentals? What are the exclusions in the lease rentals? We'll have to discuss about that in detail when we talk about Ind AS 116. So this part I'm not going to discuss any further, but I'm telling you that any ROU asset which has been classified under Ind AS 40 as investment property should be measured initially based on the measurement principles of Ind AS 116. Clear? So I'm not going further into detail. I'm just stopping it there. No extra discussion that I want to do in this particular matter. Clear? Now, what was there? That itself you parked off into Ind AS 116. There is no further discussion only. Then you said very limited discussion is there. What else do you want to discuss under Ind AS 40 then? I want to discuss the cost model and their fair valuation. I'll have to discuss about the cost model and what is the requirement of fair value. Subsequent measurement. Only cost approach. What do you mean by only cost approach? That is, on each balance sheet date, investment property should be measured at what is your measurement under cost approach? Cost of asset, investment property, minus accumulated depreciation. This concept of depreciation we have already discussed under Ind AS 16. No further discussion is encouraged in this matter. I don't want any subsequent discussion regarding the same because it will be repetition of what we have only discussed. Now, however, there is an emphasis on fair value. However, what is your emphasis on fair value? The fair value determined as per Ind AS 113 of an investment property is necessary to be disclosed. The disclosure happens in your notes to accounts, guys. Is necessary to be disclosed. Here, so the fair value is necessary to be disclosed for an investment property. Now, whenever I'm talking about this fair value, this kind of disclosure is exempted only if the fair value of the investment property cannot be determined with reasonable certainty. Exemption. Only in case fair value of the property cannot be measured reliably . This exemption, however, is not available to an enterprise which has earlier disclosed an investment property at fair value. If a particular investment property has been disclosed at fair value on 31st March 2021, subsequently, the enterprise cannot claim an exemption that fair value cannot be measured reliably. So, however, if an investment property is acquired during 2020-21 and the fair value cannot be measured reliably, it can claim exemption starting from the first balance sheet date itself. Clear? An enterprise which discloses fair value of an investment property in a financial statement cannot claim exemption for the same property in subsequent years. You can claim the exemption in respect of a new property which is acquired separately, but you cannot claim for the same property for which you have already disclosed a fair value in the previous financial statements. Clear? So that means if the fair value becomes clearly available and can be measured reliably in 1 year, then for such investment property, this exemption is not available in subsequent balance sheet dates. Clear? Now, he says fair value by an independent valuer is encouraged. This is the same statement made even under IND AS 116. Fair valuation by an independent professional valuer is encouraged. Guys, he just used the word encouraged. Does not restrict the enterprise to actually absorb or actually utilize a valuation which is done by their own employee as well. So therefore, it is only encouraged. The word encouraged is something that we have to emphasize upon. This is the same statement even used under revaluation approach of IND AS 16. Fair valuation by an independent professional valuer is encouraged, but that does not restrict anyone else other than such independent professional to give a valuation for a revaluation model or for disclosure under IND AS 40. Clear? Now, this is regarding subsequent measurement or subsequent measurement on cost basis. However, though you are applying cost model, the fair value of the investment property has to be disclosed in the notes to account, and the exemption from this disclosure is only available when the fair value of the property cannot be measured reliably. However, we said if an entity discloses the fair value of the investment property in any financial statements, subsequently it cannot claim the exemption for the same property. Professional valuation is encouraged for the purpose of fair valuation under IND AS 40 or IND AS 16 or IND AS 30. It is applicable not just to IND AS 40, but it is also applicable to 38 and 16 as well. Clear? Now, we are done with cost. We have discussed about initial measurement at cost. We've discussed about subsequent measurement at cost approach. But now we will have to talk about something called as derecognition. Derecognition of investment property. That's it, guys. Derecognition and then reclassification. These are the only two things which are left for us to discuss under investment property. All other topics, I'll tell you what are the paragraphs similar to IND AS 16, which I'm not again discussing as a part of IND AS 40. So, what is this derecognition which I'm talking about? Guys, whenever I talk about derecognition, I derecognize an investment property only in two circumstances. I'll derecognize investment property on disposal or when the investment property is discharged from active use. And classified under IND AS 105. When do you classify it under IND AS 105? Non-current asset held for sale. Only when it is discharged from active use. That means economic benefits expected from the use of the asset are zero. I only expect to realize the carrying value of the asset from sale. I am not expecting it to derive any benefit from use of the asset. No future economic benefit. Expected from use. I am only expecting to dispose the asset and sell the asset. Therefore, I am classifying it under IND AS 105. Clear? Now, what do you mean by disposal under investment property? Disposal under investment property can be happening in two situations. Disposal from sale of the asset. Disposal by finance lease to lessee. I have leased out a finance lease to the lessee. An asset was given on finance lease. Automatically, it will result in disposal of an asset. Whenever I have a sale, in such case, whenever I have a sale or I dispose it by selling the asset, in such cases, the P&L should be recognized. Profit or loss should be recognized immediately. Gain or loss on disposal by sale should be recognized immediately. But if the disposal is by leasing out the asset under finance lease to a lessee, in such case, gain or loss should be recognized over lease term. Over the lease term. Lease term is for 5 years. So recognize the profit or loss also for 5 years. Do not recognize the profit or loss immediately. But if it is by sale, disposal is done by single shot of sale, then the profit or loss should be disclosed or should be recognized immediately in the statement of P&L. The other way of disposal is by classifying the asset into IND AS 105. When do you do that? When the asset is discharged from their active use and I don't expect any future economic benefit to arise from the asset, from the use of the asset, but I only expect future economic benefits from the disposal of the asset by sale subsequently in near future. Clear? That is your classification under IND AS 105. And that will bring us to the end of our discussion on derecognition of investment property. Now that you derecognized an investment property, either from disposal or from discharge from active use, now we will have to talk about the last part called as reclassification. What do you mean by this reclassification? What is this concept of reclassification? Why does it even emerge? Now, if you remember, and I gave you the example that an enterprise was holding a property for their own purposes, but subsequently when the team size has increased, I shifted my operations to a new location, and this premises which I already owned, I made sure that it was leased out. So until it was leased out, it was an owner occupied premises and it should have been classified under IND AS 16. Now that you vacated the premises, occupied a new premises, and the earlier premises was leased out under operating lease, now you have to classify this building as investment property under IND AS 40. That means it has been reclassified from IND AS 16 into IND AS 40. For example, the other example which I have taken was a building out of which are 5 floors, 3 floors I occupied, 2 floors I let out. And I said it is separable because it can be sold or leased out separately. Therefore, it is capable of being sold or leased out separately. Therefore, the first 3 floors I'll classify it as IND AS 16 owner occupied premises. The other 2 floors were classified as investment property under IND AS 40. My size of the enterprise is increased. So I started occupying the 4th floor by asking the tenant to vacate or the lessee to vacate the premises. He vacated the 4th floor. I occupied the 4th floor also for my own purposes. Now what happened? Earlier the property was IND AS 40, that 4th floor. Now it has become IND AS 16 property, plant and equipment. Possible. I am a property developer intending to hold the units of property for sale in ordinary course of business. This was an exclusion from investment property which we have dealt separately. I said if the property is held for sale in ordinary course of business, should be held as per IND AS 2, should not be dealt as per IND AS 40, even though it is a land and building. Let's say I was holding it for sale. No one approached. The units are unsold or the required price at which I quoted them, I'm not able to get the same price. So I said, okay, let it be. Let us lease out the property until I get the required rate, is what I thought. At least certain amount I will recover. Otherwise, inventory holding cost is very high. So I basically made sure that I was writing operating leases and I let out this entire property. Okay. So earlier, when it was held for sale in ordinary course of business, it was IND AS 2. But subsequently, today it has become IND AS 40 because you intend to let it out on operating lease. Correct? Absolutely. So this is also a subsequent reclassification which happened. Now, in the other way around, subsequently after it was let out, after 6 months or 8 months or after 1 year or 2 years, I got the desired rate. So I asked all my lessees to vacate the premises. I again turned it into inventory and sold. So what is happening? IND AS 40 earlier, now became IND AS 2. So this sort of reclassification is possible when you keep shifting from one classification to the other. So that means it is possible for us to classify an asset already held as IND AS 16 or an asset either held as IND AS 2 can be classified or reclassified into IND AS 40 as investment property. IND AS 16 can be classified to IND AS 40 or Ind AS 40 can be classified as property, plant and equipment under Ind AS 60. Both examples are given. Similarly, a property held as investment property can be classified as inventory held for sale in ordinary course of business, or an inventory held for sale in ordinary course of business can today be classified under Ind AS 40 as investment property. Either of these ways are possible. Whenever this reclassification happens, that means from one standard to the other, from property, plant and equipment to investment property or otherwise, or from inventory to investment property or otherwise, whenever you have this sort of reclassification, at what value should I measure this? Why are you talking about valuation? Is it so significantly different? Yes. If an asset was earlier owner-occupied property, I had a choice to carry this asset on each balance sheet date either under cost model or revaluation model. Subsequently, if it gets classified to Ind AS 40, it should only be carried at cost model. Inventory, no depreciation charge, should always be carried at lower of cost or net realizable value. But subsequently, when it gets classified to Ind AS 40, it has to approach cost model and should provide even depreciation as well. Therefore, at the time of reclassification, pricing it or cost, identifying the cost is very, very important. So for this, I'll bring out the statement saying that on reclassification, property should be measured at, property is land or a building or both. Be measured at carrying value should be measured at carrying value on date of reclassification. Shall be measured at carrying value on the date of such reclassification. That will bring us to the end of discussion on this standard Ind AS 40. Now, like I told you, there are certain paragraphs which are significantly the same. You find that there's a common similarity between the paragraphs which we have dealt under 16, 38 and 40. Let us try to understand them.